Bitcoin's chart on Binance just flashed a red alarm, $106,893, and sliding. Liquidity pools draining as Iran's missile salvo rattles the Middle East and risk-off flows slam volatility into the stratosphere. I'm talking to you now because this is the eye of the storm. Funding rates are plunging into negative territory, echoing Keynesian panic where herds stampede for safety, and Schumpeterian creative destruction is tearing apart complacent long positions. Today, the 27th of June 2025, the annualized funding rate hit a 7-week low even as Bitcoin clawed back to $108,000, an oxymoron only Taleb could love, where antifragile positions thrive amid chaos but fragile carry trades snap like twigs under stress. Meanwhile, the crypto fear and greed index sits at exactly 50 neutral, but trembling, and the altcoin season index languishes at 20, a stark Sen-style indicator that capital is consolidating into Bitcoins. Perceived shelter. Market cap stands at $3.28 trillion, but volume is stuck around $100 billion. A liquidity moat that's narrowing as whales rotate out of spot into options. The $20 billion monthly options expiration looms at 10 a.m. UTC, a Schumpeterian engine of volatility where gamma traps can vaporize retail stops before institutional delta-neutral desks even blink. Clarity demands we map the battlefield. On-chain liquidation heat maps show bright striations. Around $106,000 and $108,000 levels, where over $60 million in long and short positions could blow up in microseconds. These strips are the modern equivalent of Keynes's beauty contest traders guessing what other traders expect, but with blockchain transparency amplifying the feedback loop. On the order book, you see thin bids under $106,500 and scant offers above $109,000, the telltale spread of fragility. The crypto bubbles map glows. Aptos plus 6.4% and Say plus 6.1% are the green islands of resilience, while TIA 7.9%, SayPX 7.2%, KAIA 7.5%, and KACE 6.8% are bleeding red sentiment cycles at their cruelest peaks and troughs. Darren Acemoglu would call this a filter failure, infrastructure and network effects dictating winners and losers in real time. Transition into mindset. You must embrace the paradox of risk and opportunity. When everyone else panics into fiat bridges, that is your clarity, cold, surgical, unemotional. Daniel Kahneman's fast and slow thinking collide here. Your slow, analytic mind spots the order book thins. The fast, intuitive mind senses the terror in every candle wick snapping downwards. Act. Allocate tactical skews trim delta slightly negative into the $107,000 resistance. Then redeploy into call structures struck at $115,000. Build your antifragile portfolio. 10% in spot Bitcoin as your anchor. 5% in ETH options to hedge against continued risk-on in altcoins. And keep 2% capital in stablecoin yields as dry powder. Monitor the CME Bitcoin ETF flows. They just saw $200.3 million net inflow on June 26th. A sign of institutional thirst that Parag Khanna would call connectivity tugging capital east to west. Shifting to macro clarity, U.S. equities are flirting with all-time highs S&P 500 at 6.0 T-points. No, that's trillion-dollar market. Cap scales on Bloomberg's chart, but risk assets are dancing on a pin's head as Fed doves waver. The S&P closed near its peak amid trade talk buoyancy and waning Fed rate cut bets. Yet Fed minutes show officials leaning against a July cut, a Piketty-style divergence between market price policy and actual central banker resolve. This dovish-hawkish split is bleeding into crypto. Real yields rising make digital gold. Less alluring, yet geopolitical tail risk inflates Bitcoin's digital insurance narrative. Now clarity into commodities. Gold is holding $2,400. Silver at $32, oil stable $80 real assets, sitting quietly beneath the crypto maelstrom. Inflation hedges appear where policy missteps create micro-dislocations. Consider long-duration tips in tandem with Bitcoin spot as your dual inflation arbitrage. channeling Friedman's monetarism that money supply shocks land hardest on fiat. Actionable metaphor. Imagine market chaos as a volcanic eruption. Crypto bubbles map are the sparks flying. The on-chain heat map is the magma pathways, and your portfolio is the castle in the valley. To survive, you must bunker down in the moat with liquidity cushions and antifragile exploits, unlocked yields, structured products, skewed options. Behavioral cycles. When the crowd runs screaming, that's your buy signal. Nassim Taleb's barbell strategy is alive here. Keep 90% in ultra-safe, low volatility assets, stablecoin GYEN or USDC at 5%. APY and 10% in hyperconvex options on Bitcoin and ETH. When Tether redemption fears resurface, watch. The premium on Binance USDT deposits execute straddle buys at the $100,000 strikes. Turning to crypto ETFs. Bitcoin ETFs just saw fresh inflows, a signal from the institutional quadrant that digital gold is maturing. Contrast that with outflows in altcoin funds. CoinMarketCap 100 index down 1.03%, reinforcing the Bitcoin season thesis. This is the Acemoglu network effect in action. Scale begets scale. Liquidity begets liquidity. Dominance begets dominance. Urgent warning, as BlackRock's EBIT ETF inches into $108,000 support. A failure to hold could trigger cascading stop-loss sells, wiping out $300 million of market cap in minutes. That is your tail risk. The only way to profit is to front-run it with conditional limit buys at $105,500 and staggered call buys at $112,000, $115,000, and $120,000, building a volatility ladder for when the crowd capitulates. Meanwhile, macro watchers must track the euro stablecoin surge nearly $500 million in EURUC. Flows amid dollar softness and diverging monetary policies in the eurozone. Amartya Sen would frame stablecoins as social choice media, but treat them as tactical yield targets. Park idle capital in EURUC at 4% until crypto volatility offers your re-entry. Your emotional connection. I know your screens are red, your chat channels buzzing with sell screams, your heart racing as your P&L plunges. But humanitarian thinkers like Yuval Noah Harari remind us crises forge new orders. This is your chance to build conviction. Your strategy must be vision-driven and data-anchored. Monitor the Binance order book depth, CoinLast liquidation heat map, and open interest across strikes. Now zoom into specific names. ETH sits at $2,446, down 1.67% ironically, a gift from the market gods. With EIP 4844 on the horizon, Layer 2 adoption accelerating, that dip is your capital injection point. Buy spot E, then 3 leveraged ETH calls at the $2,800 strike for Q3 expiry, capitalizing on network upgrades and fee deflation. Don't tap Scott's insights on blockchain adoption. Tell us that DeFi real rate yield alternatives will plug the liquidity void over the next cycle. Stake UMA, Layer 2 tokens, and lend stablecoins on AV for 8% APY, small allocations but antifragile compounders. As we glide toward tomorrow's Asia morning session, watch South Korea's regulatory whispers. Rumors of crypto tax cuts could spark localized pump and dump cycles. Asia's morning briefing from CoinDesk flagged banks eyeing stablecoins to prevent deposit flight. Liquidity lifeboat for major exchanges. Park 5% capital in backed stablecoins on Korean exchanges and arbitrage the on-chain off-chain spread. Finally, thesis for 2025 to 2030, network effects, monetary dislocation, and exponential technology upgrade cycles will conspire to make crypto a strategic asset class. You cannot afford to miss the inflection point at $115,000, nor the tailwind of ETF adoption, nor the geopolitical insurance narrative. Your mission: allocate capital with antifragile skew, hedge tactical drawdowns with structured products, and ride volatility like a trained surfer, each wave a wealth creation opportunity. This is your message, your playbook, your moment to act. The market chaos demands surgical precision, and only those who integrate Keynes's liquidity preference, Schumpeter's creative destruction, Kahneman's dual system thinking, and Taleb's anti-fragility will emerge as tomorrow's winners. Lock in your triggers, set your bids, and when the world panics, strike with confidence. Because in a chaotic world, clarity and action are your greatest assets.